Hello and welcome to Pro Trader Strategies market commentary for Wednesday or January the 16th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, I am here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right. Let's get it on with some economic data across the pond. We got the CPI out of Great Britain came in at 2.1%, which is in line with expectations. Remember, CPI is Consumer Price Index. That's a great indication as to whether or not manufacturers through the PPI, which is Producer Price Index, are passing along higher prices to the consumer. It seems like we are right in line with what was expected, so that is a good thing. And then PPI input came in at negative 1%, expected to be a negative, that was a negative 1%, expected to be a negative 1.5%. So better than expected there, not really seeing a whole lot of price increase there. Core CPI out of Great Britain came in at 1.9%, better than the expected 1.8%. And then PPI output came in at negative 0.3%, expected to be a negative 0.2%. On to National Association of Home Builders is going to be coming out later on today. We got importer prices coming in at negative 1%, expected to be negative 1.3%. So again, not really seeing those higher prices being passed on to the consumer through these tariffs, which we would expect to see higher prices going on. And we get crude oil inventories coming out here pretty soon. And finally, later on today, we get Beige Book. Now, make sure you check out that Beige Book. It is a little bit early, and it's not one of the most widely looked at economic data points because the Fed, actually, the FOMC, gets a more updated Beige Book in a sense. I think they call it the Blue Book or something like that. So they get a more updated that not everybody else gets to see. But this does give us an indication as to what they are going to see when the Fed meets again. So they get that a couple of days before their meetings. All right, let's talk about the markets. Crude oil coming off just a little bit, still holding on to that 50 handle, really consolidating right here in and around these lower 50s. It's starting to accept price at these levels. As you can see, the volume node starting to really build out here. So my whole theory of us getting up to those mid 50s, kind of filling in this gap, may not happen anytime soon, as it's starting to get very comfortable right here around that $52 a barrel area. Gold futures are starting to rally today and just slightly higher. Equities are higher. Everything's really not making a whole lot of sense. The bonds kind of unchanged right now, waiting for the shoe to drop on the equities, really. We got the VIX starting to creep higher. These are all like little indications that there might be something going awry in the equities because we have the equities popping here with the VIX moving higher, which means, there's some put buying going on to protect these levels. Not always a good sign for the equities when you start seeing the market rally and VIX going up, which means that people are putting on protection a lot of times. This chart also not looking too great. We were saying, settle above the 50-day moving average would be pretty good, but we really needed to get over these resistance areas, and we've kind of failed on that. That's not looking very good from a chart standpoint. Tomorrow, if we get a big sell-off, that's going to be a confirmation of a top. So we might get that little bit of a bounce, or some people might consider this a dead cat bounce. I think that this is more than a dead cat bounce. I think that it is really kind of working through all of this technical move here. So I think that that's maybe going to roll over a little bit, but I don't really see us retesting the lows. All right. E-mini S&Ps chart looks very similar, doesn't it? I mean, all of these charts are kind of folding out the same. E-mini S&Ps kind of looking a little toppy. If we look at the daily chart, each blue section is a day section. Each candle is a 30-minute section as well. We can see on the open, the market started rallying off the economic data, but we have just slammed down as soon as we made new highs and really are starting to retrace that, getting out of those in a matter of 30 minutes. A rally to the highs and then complete retrace in the next 30-minute candle is not boding well for the rest of the day as far as I can see as of right now. And then let's talk about a trade that I've done, Goldman Sachs. It's trading right around 190. I always suggest getting out of these earnings trades early because you never really know what's going to happen. And I went into the January, sold the 170, 190 strangle in there. You can see the 190s are definitely being tested. At least now. I got out before it went into the money. I got a brief window off the open that I was able to get out. A little bit of a loser there. You can see that it's that 190 call was being tested. That's the one where I lost on. With the JP Morgan coming out, not making earnings, I thought that this would be a little bit more in line with yesterday's settlement. That's why I threw that strangle around there. Obviously didn't work out, but those puts did help. So it's a good thing I put those on rather than just doing the short calls, right? All right, that's it for today. Tomorrow we're going to be doing a webinar on short puts. This is a great market because we have high implied volatility right now. The market's starting to make a rebound here. This is going to be a good opportunity to start throwing in some puts, selling some premium in and around this high volatility. So check it out tomorrow at protraderstrategies.com. Sign up for my webinar. I'd love to see you guys there. And if you can't take that, take it easy.